You're probably scared. The next guy you talk to is probably pretty panicked as well right now. And it doesn't help that friends and family are asking you, hey, is the crypto bull market over? Should I pull my coins out? What should I do, Mr. Crypto Expert? And you're here thinking to yourselves, well, hey, I don't even know myself. And that is the point of this video, to help guide you into what might happen over the next month in May. Everyone's panicking about May, and what most importantly will happen over the next 12 to 18 months as well. Now, this video is going to be littered with tips that really, I believe, you should have learned yesterday. So please pay attention, guys. This is not one you want to miss. So Bitcoin is now at $57,500 and Ethereum is just under $3,000, which has given a lot of influencers and articles, a lot of reasons to make very dangerous and FUD-based titles, okay? Like the bear market is here, bull market's over, so on and so forth. But this market is designed around hype. It is completely designed to get you to click. Matter of fact, the reason why projects pump in the first place is because they're appealing to click on. They're appealing to want to buy. Again, all built around hype. So it really isn't a tip per se, but walking through the door in this case and welcoming you into the video, I would just say, while the markets look red overall as a whole, and this was a lot worse looking yesterday, and it still might get even worse, I just want to remind you guys, please watch videos or actually read articles and don't just fall for a very clickbaity title, okay? That's step number one, if you will. Now, what I really want to touch on first of all is that, yes, we are going to have pullbacks in the market. May is a month a lot of people are expecting us to have quite a large retracement. Now, whether we do continue to go sideways, whether we continue to go downwards, or whether mid-May we decide to go up, I'm not entirely sure. History says that the Bitcoin halving gives us about a month of slight downwards / consolidation trading action, and then we move up, okay? I'm going to show you some charts here momentarily that will indicate to you this in a lot more detail, alrighty? But corrections are healthy. If we don't have corrections, and for example, we just decide to go up in a straight line like this, we can expect substantial pullbacks. You could call them crashes, okay? These are corrections. These are 15, 20, 30% drops, which are healthy. 40, 50% crashes, like we will see at some point in time, that kind of look like this, okay? Where we kind of came down from the top over here after that first massive pull, rally, and then we came down. That was, I guess you could call a crash, right? This was pretty substantial. It was around 55%, and I believe we'll have something similar later on in the cycle. But just like we've pretty much pumped up, like I showed you in last night's video, about a 2.5x, I believe we have probably double that to still go. So we probably have around a 5x from this current market cap to go, which would be about a 10 trillion global market cap. I firmly think is on the cards. In the last cycle, 19% pullbacks were pretty common. That was our current 15% standard pullbacks. We've had many 15% pullbacks. Their standard was even worse, 20%, okay, with the occasional 30% or so pullback. So just want to remind you, these are going to happen, and these are a good thing. Now, what I'm going to show you momentarily here is what you need to be doing on these dips. And yes, it's very obvious, but I want to show you the implications on my recent buys yesterday on this dip and what that's done for my portfolio, my risk, and my overall profits in the market. Just like Charlie indicates here on this Twitter post, where we are right now is a very similar place we've been like 3 or 4 times before. Every single cycle, we have this exact thing play out on the halving. We've been here probably a bit longer, and we will stay here a bit longer than normal because we breached all-time highs on Bitcoin like a month before the halving even happened, which doesn't typically occur. So, given that, we might still be here for a bit, but nevertheless, like he's shown, we are still going to go up. It is a fact. It's not a matter of if, it's a matter of when. Now, like this chart also shows from the 2021 cycle, we're going to have some pretty big pullbacks, which again is a perfect opportunity for us to accumulate cash in these periods, not to FOMO in and not to buy coins we've been eyeing off for months now and then get in when they're up 100%. Right? We want to wait for a crash to happen, and the crash will occur. Not one, not two, multiple, all right? Then we can buy these altcoins with the cash we've accumulated, which means we can then put in much lower average buys, which then, of course, means we're going to make some more multiples in a safer way. It very much so reminds me of this meme over here, okay? a lot of people will end up giving up, like this bottom guy over here, right before they strike gold, right before they hit that pot of diamonds. And yet we need to be on our asses. Basically, we need to be working and consistently just rocking up every single time. And sometimes that just means not quitting, okay? That just simply means not getting scared when the markets come down, not listening to a whole bunch of hype or fear on the internet, and just stick with our guns. We're going to make money in the market, guys. As long as you're realistic with the coins you've purchased and therefore your overall returns for those coins, I'll show this in an example momentarily, you will be fine. I want to touch on the stock to flow model chart as well, because I made a video last night talking about a similar topic to what I'm talking about today, a little bit different, of course. And I've seen a lot of people panicking as well. And generally over on Twitter, a lot of people are very concerned about what might happen next. So, just to remind you all, where we have been at this current point in every single cycle before this, on the last blue dot was plotted this month. The next dot will be red. Every single cycle before this one, once we start hitting these red dots, we begin going absolutely parabolic. Now, like Plan B said, given the trajectory of the last cycles, once we start hitting red to once red kind of ends and we start going orange, we will probably be about 1.5 years away from where we are right now. So around about mid-2025-ish, 12 to 15, 18 months, somewhere around there. So, early to, I guess, mid-late 2025 is when the cycle will end. Now, he's actually mentioned in this video, funnily enough, a few different cycle patterns, one being the one I recently picked up from Credible Crypto, being the lengthening cycle or left-translated cycle theories, which indicate we could have the bull run end sometime in quarter 3, quarter 4 of this year. Now, again, you don't want to bank on any one given plan or pattern. What we know for sure, everyone agrees on, we're going to have a massive next leg up. And you can see this next leg dwarfs the blue, right? It typically is 2 to 3 or 4 times larger than what we've experienced so far. So all of this amazing price action we've so far seen, right? All of this, if I kind of scroll back here, that we've kind of like 2.5x'd, we probably have, again, another 2.5x multiplied by 3 to go. So what that kind of looks like is a gain of about 500% or so. So around about here. That's still to come, if not even more. So there's nothing to be concerned about like this shows, but again, it might occur sooner or later. As long as you have your positions, I think a lot of these coins will still hit these sell levels, whether it's sooner or later, it doesn't really matter. We're just making our gains no matter what. Now, before we dive any deeper, I'd like to spend a very important 2 minutes just briefly explaining a kick-ass futures trading tool that requires no KYC and a sign-up so quick you don't actually need to sign up at all. It's called Futures AI, a web, Discord, and Telegram-based trading tool that offers up to 20x leverage for their users and an extremely fast experience thanks to their bespoke in-house run and operated infrastructure that powers everything, even the damn servers. Futures AI is powered by the proprietary AI-optimized order engine, which their team designed to handle orders from any cryptocurrency token across their 3 deployments. Their leveraged liquidity fund is backed by the community and so far amounts to just under $200,000, which is a considerable amount considering their token, FAI, launched on April 8th and is just over a $1.5 million market cap as we speak. The project currently has 8 contracts, Bitcoin, Ethereum, Grok, and a few other meme coins designed to allow the users to trade futures with stable assets and the choice to dabble in the highly volatile world of meme coins. We can expect Solana, Avalanche, and Polygon contracts to be enabled in the near future as well, providing more diversity for users. And if you stake your FI tokens on their website app, you'll unlock the Future Pass, enabling even more trading options. The ability to fund your trading wallet by connecting your Web3 wallet or sending funds to an automatic account created by Telegram was an immediate jaw-dropping experience and feature for me. And when they introduce cross-chain capabilities in quarter 4 this year, we can expect a hell of a lot more jaw drops to still come. There are plenty of centralized exchanges out there that block you by region or require KYC, but Futures AI offers a complete workaround by not hindering their users from accessing these markets and going the next step by enabling access within Telegram or Discord itself. If you want to take a closer look at Futures AI, even if that temporarily means not trading, check out the first link in the description for an insane 25% sign-up bonus. And with that said, let's get back to the video. Something else Plan B also spoke about was a realized price of Bitcoin chart. Now, this is the realized Bitcoin price chart, okay? So we have Bitcoin's current price here versus the realized price. The realized price is just the last traded price, so being $63,000 or so for Bitcoin, divided by all of the current supply of Bitcoin, which gives us an average buy price if all of the tokens, of course, are currently in circulation, which gives us about a price of $28,000 or so, $29,000. Now, what he shared on his video was a few different averages of, the realized price. So we have the realized price in black here at $28,000, but also we have the 2-year realized and 5-month realized. What he pointed out as a pretty good indicator of what might happen next is the fact that Bitcoin's price in red has just touched and should possibly rebound off this mark like it has done in the past when we plateau at this point in time. So this happened way back over here. If you can kind of see, it's not the best sort of quality, but we kind of hit this way back in 2021 or late 2020, one of the two. At this point in time, we can see we touched the blue line and we plateaued here, this sort of flattened out period. And we also did the same back here in 2017, late 2017, that is, okay? So nevertheless, what occurred past those 2 points in history was that massive surge up, which he also indicates. Now, I'm not a fanatic with the realized Bitcoin price. I've never looked at this before in my life, to be honest with you, but I've done a little bit of digging on this so far, and it does look quite bullish. It does actually hold some merit because it gives us an indication of the overall value of Bitcoin, okay, versus, well, in this case, the blue line being the 5-month realized price, which means we've touched that now, which means that technically, given the last 5 months, we're actually at the average buy-in for most people. So that's quite good, okay? That means that we've hit some level of support, and hopefully we should go up from here. Now, I've shown this chart we're looking at here a few times. This is just my portfolio. I made this tracking sheet for you all. It's in my private community. You can level 1 access and above. You can go ahead, use links down below to sign up to this, of course. And I created this to allow you all to have complete control over your portfolios, create initial investment levels, recalibrate your portfolio in a very seamless way, plus also then go ahead and create individual sell levels for your portfolio. Tracks weighted average, tracks everything. Really, this will save someone countless amounts of money and hours in the market, but I'm not here to sell it to you. I'm here to show you a very important thing. Yesterday, I bought the dip, and here's why it's important to buy the dip, okay? I put about 5% of my portfolio into the market, so it wasn't much, at least, again, in the grand scheme of my portfolio. For someone that has a portfolio size of $10,000, this is like you putting in $500 in one hit, dollar cost averaging into multiple projects. So my portfolio before this, you can see here that I was getting revenue at about 3.9 million US dollars, at least if I was to execute on this plan, which I think is very realistic. Here's some of the multiples made, right? You can see some of these coins are at 20x, some of these at 12x, 16x, 18x, so on and so forth, with the overall target I need from my cost basis, the money I've put in the market, to get my goal of 3.5 million US dollars, which is a 14.1x. Now, all that considered, again, we can see some of my average buy-in prices and the amounts I've purchased here. So I decided to dollar cost average into Render, Pith, and Celestia. So we can see my average buy-in prices from $8.60, $60, and $11.08. After my purchases, we can see here, I'm being completely transparent with you guys. That's one thing I like about what I do over here and why you should go ahead and subscribe is I keep it 100 real with you so you can make the best decisions and based on what I teach. Right? I walk the walk and talk the talk. So you can see here I've brought down my averages slightly, right? So now 1087, 58 cents, and also 845 with, of course, buying more tokens. But what this allowed me to do was increase my cost basis. So you can see here now in USD, I've put in about 261,000 US dollars. And if we come back to this, before it was 250. So I put in about $11,000. That is correct, which then reduced my required multiples down by 0.6. So rather than 14.1x, I need now a 13.5x. And here's what it did. It allowed me to generate on the top side, okay, $4.1 million rather than $3.9 million. So that just earned me $200,000 right there, okay? Because of the coins I put it in, okay? Pith being higher than these two, or I'm pretty much looking for a 9 or a 10x out of Render and Celestia. But Pith at a 17x brought up the multiples there quite a lot. So I've made, again, 200 grand on the top side after the cycle by just buying that dip. Now, again, I get it, right? I don't want to kind of flaunt my portfolio. I really want to be careful with this. I get sometimes funny about sharing these things publicly. That's why I do all this in the private community strictly. But there is times where I really want to stress to the mass market, guys, if you're watching this, please understand buying the dip is so critical. If you had a $10,000 portfolio and you invested 5% of that overall, which is again $500, you'd be able to do a similar thing. On the top side, maybe you're someone looking for a 50x average with that, which would mean that you would make a hell of a lot of money, okay? You'd make a lot of money in that dollar cost average, which is why, again, don't buy in FOMO on the way up. Wait for these retracements to come and put that capital in. If you kind of have to wait 2-3 months for the market to finish overheating, then settle back down again like we're seeing now to accumulate, 5% of your portfolio. For me, again, it was 11 grand. For some of you, it might be even 100 grand. Some of you guys make it some really big bucks, whatever it is. You can then buy the dip when the dip comes. I cannot stress that enough. Now, you've got to buy the dip, guys. Don't go taking out loans, none of that crazy stuff. That can get you in a lot of trouble. What you want to do is go to a very reliable exchange that has a lot of flexibility. Now, this is CoinW, and I've recently partnered with these guys, but what we're doing is amazing. First of all, if you sign up using my link down below, the link will be here. It'll take you to a Telegram group, right? So you'll have a pop-up like this. You'll join the group, do the verification in this group. It'll take you to this page here to sign up. It is completely free. Then if you decide to trade, which I would recommend you do, of course, because you get initially a free $5 on sign up, and you get bonuses like up to $30,500 in rewards, $100 on futures completely for free. Plus, by doing it via Telegram, you will then actually be entered into a private community group on Telegram once you complete those steps and sign up via my referral link to have buy and sell signals, in-house CoinW professional traders helping you out, trading setups all done for you, and new listings, plus a whole bunch more, all in that Telegram group. I'm getting Mark in there as well. Mark is going to be allowing you guys to copy his trades as well as those professional traders over on CoinW. We've made this specifically to help you guys out. And the beautiful thing is you can join that group completely for free. Like I said, you don't have to do any extra things, any extra trades whatsoever. You can join that for free once you sign up via my referral. So with that being said, everyone, thank you all for watching today's video. I hope you have enjoyed. And if you have, drop me a like down below. I will talk to you very, very soon. Take care. Bye.